consolidation adjustments. Chapter 23, consolidation adjustments. So we are continuing our consolidation steps. So here we're going to deal with concepts like uniform accounting policies, then how to deal with the investment property. We talked about it a little bit when we were dealing with investment property separately when we were studying it, but here again, we're going to stress your attention what we need to do when we have investment property within the group. And then we're going to look at how to deal with goodwill on acquisition. So we will look at this consolidation adjustment because goodwill on acquisition is consolidation adjustment. We will look at the calculation again because we looked at in our previous chapter, but here will be something different. So there may be consideration, different considerations, then consideration transferred, and there may be some identifiable assets and liabilities of the company which may classify as intangible assets, then fair values. Then we will look at fair value adjustments and different kind of examples related to fair value adjustments. Accounting for goodwill, what is positive goodwill, what is bargain purchase, and provisional accounting. So the objective of this chapter is to understand necessary adjustments before consolidation. So they may be different kind of adjustments when you are doing consolidation or when you have group, right? What are those adjustments? So the adjustments may be related to separate financial statements and consolidation adjustments. So two types of adjustments. What are the adjustments to separate financial statements? Let's suppose you have a group, and within the group you have different companies, right? And they all may prepare separate financial statements, right? And when they, let's say, operate in different countries, they may apply different accounting policies, right? Let's say in one country, their legislation allows only to prepare financial statements using their standards, not IFRS, not other standards that are acceptable by group. But the group wants, or group prepares, or the parent prepares financial statements using IFRS or US GAAP, and that's why you have differences, right? One subsidiary applies one standard, another subsidiary applies another standard. So when you are doing consolidation, of course, you cannot combine the figures because first of all, you need to do adjustments, right, to the separate financial statements and then do some other adjustments. So the adjustments to separate financial statements are those ones that makes makes you, let's say, use the same accounting policy as parent uses. All right. So, and for financial reporting purposes, also, we're going to look at this investment property, how it affects your separate financial statements and how they should be reflected in consolidated statement of financial position. All right. But for what are consolidation adjustments? Consolidation adjustments are those ones that are related to the goodwill recognition, their impairment, and also elimination of intergroup transactions, intergroup balances. So these are consolidation level adjustments. So before doing consolidated statement, you need to first of all deal with the accounting policies and make it the same as parent. Do these adjustments and then start your consolidation. Okay. And also, if you have investment profit, also you need to deal with this investment property, make adjustment, and then you can start doing consolidation. And on consolidation level, then you will have other adjustments. Okay. But for financial reporting purposes, we're going to focus only on consolidation adjustments. These ones we just need to know that they exist and what is the process, just for our understanding. Так, Ксения?
Подскажите, пожалуйста, вот на практике сначала консолидация идет, это просто плюсуется, а дальше аджастменты, да, идут в сталке?
Нет, на практике, вот как я сказала, сначала мы смотрим, какой accounting policy наша компания использует, да, то есть какие стандарты использует, чем это отличается от группы. И потом уже после того, как мы сделаем точно так же, как и группа, да, использует, потом мы начинаем консолидацию. То есть мы сначала делаем adjustment to separate financial statements, а потом уже консолидацию, а потом уже adjustment на консолидационном уровне, который мы с вами сейчас делали, да, elimination, там, intergroup transactions, unrealized profit и так далее.
А на экзамене будут кейсы и вот...
А на экзамене, да, вот этот первый не будет использоваться, adjustment to separate financial statements, они не будут просить вас делать это. На экзамене будем только делать вот consolidation adjustments. А это просто могут спросить, что за вообще adjustment, да, такие. Просто нужно знать, что uniform accounting policies, это значит, что the same accounting policy should be applied within subsidiaries, да, the same as parent. Usually, when there is a group of company, of course, they have group accounting policies. They should be applied by companies. But in some cases, they may not be able to apply. Why? Because in those countries where they operate, the requirements may be different. Let's say in Uzbekistan, they have right national accounting standards, which are different from IFRS. Of course, they will do their accounting using national accounting standards, but when they need to prepare consolidated statement, statement, right? They should do those adjustments to their accounting policies and then give those figures for consolidation. For example, in our country, in the company where I work, they had 3 types of accounting simultaneously. Why? National accounting standards, because they were used for tax purposes, and second one was IFRS for group accounting purposes, and also US GAAP, because we had also another type of reporting to the regulators which were in the US. So 3 types of accounting: national accounting standards, IFRS, and US GAAP at the same time. Uniform accounting policies. So IFRS 10 requires consistent accounting policies across the group, right? So adjustment needed for media acquisitions and foreign subsidiaries using local GAAP. So as I told you, if subsidiaries use the local GAAPs, like national standard of Uzbekistan when they operate in Uzbekistan, right? Of course, they need to do adjustments according to the group accounting policies and then use those figures for consolidation. Or if there was a media acquisition, what does it mean? In media acquisition, let's say throughout the year, half year, the subsidiary didn't belong to the group, right? Only the group policies may be applied after the half year, right? So for the half year, you don't apply accounting policy. For the half year, you apply. So this adjustment should be also done because you don't consolidate the figures for the whole year, right? In this case, the profit for the whole year doesn't belong to the group, only for the half year because the control was obtained after half year. So these are the adjustments that are called uniform accounting policies. What about the investment property? If you remember, investment properties are those ones that are held for rental purposes, right? So you rent them and gain some money because of you are renting those property. But what happens if one subsidiary, let's say, have a building and rents to another subsidiary that building, right? What happens in this case? In this case, it means that within the group, one subsidiary or one company gives to rent to another company, and it's not treated that it's as investment property. It's treated as owner occupied, right? So within the group, they use it for their own purposes, right? For the group operation purposes. That's why they are classified as owner occupied under IAS 16. So adjustments are done retrospectively. It means that for the whole period, they should show that building not as investment property, but owner-occupied property, and make those retrospective adjustments and account them as IAS 16. Okay, now we're going to look at consolidation level adjustments, which one of them is goodwill on acquisition. Goodwill is recognized only in consolidated financials, right? You cannot recognize it in your separate financial statements. Only when you combine the results, you can see that there is a goodwill or not. Typically included as non-current asset, right? Goodwill we include as non-current asset. How we calculate goodwill? Fair value of consideration that is paid by parent, right? Plus NCI minus fair value of net assets. This is the basic formula for goodwill. But if you remember, in here we have NCI at fair value or NCI at cost, depending on what we have, what we use for calculation. We have different approaches for this NCI. The consideration means that the money that is paid by parent or some funds provided in order to acquire another business, right? So the consideration may be different: deferred consideration, contingent consideration, and share for share exchange. So not in all cases, parent pays in advance whole amount. Let's say and for 80% of the subsidiary, they should pay 200,000 and they straight away pay 200,000. Not in all cases it happens, right? So they may be deferred consideration. What is deferred consideration? They may say, I'm paying now for this 80%, let's say 150,000, and after 1 year, I'm going to pay 50%. I'm going to pay 50,000. So this 50,000 that they are saying that I'm going to pay after 1 year is deferred consideration. If you remember, if there is a deferred consideration, we need to calculate present value of future payments. So future payments will happen after 1 year. So for 1 year in this case, we need to calculate the present value and include it into our consideration, the present value of future payments. And also, if they are like a 1-2 year deferred considerations, of course, we would have this interest expense on unwinding. So we unwind, it means that we are topping up, right, that amount with the interest. Interest we calculate using the discount rate that we use for calculation of present values. Then another type of consideration is contingent consideration. Contingent consideration means what? Contingent means by its, let's say, translation, right? Or the meaning, something that may be based on future event, right? If future event happens, then this contingent consideration also will be available. So as an example, I can tell you that the company, the parent, right, may say, I'm buying now this subsidiary for 100,000 in case, let's say this subsidiary will earn 15% at least profit in the future, then I'm going to pay again 50,000. In this case, if it happens, right, if this 15% profit is gained by this subsidiary, this is the event, future event, right? And the contingent consideration in this case is 50,000. So this contingent consideration also can be included, and it's based on future events and measured at fair value. So we're going to look at these examples now. Just I want to show now for your understanding what kind of considerations we have. But we're going to look at the examples and how they work and how we include into our consideration these amounts. Then another type may be share for share exchange. So parent may not pay in cash. Parent may pay with its share to subsidiary. So it may give some part of share to the subsidiary in order to acquire that subsidiary. It's called share for share exchange. We measure this consideration using market value on acquisition date. All right, let's look at this examples now for deferred consideration and other type of considerations. So again, for calculation of goodwill, if we look at it not in a formula way, but this tabular approach, so we take the fair value of consideration transferred, right, the money that is paid or provided by parent, the non-controlling interest amount. So non-controlling interest, sometimes it is given, but sometimes you need to calculate it based on the net assets of the subsidiary. And the fair value of identifiable net assets, right? And sometimes they may be at cost as well. So depending on different approaches, different methods, you may use the fair value of net assets of subsidiary or the cost method. And so depending on what you have here, positive will be goodwill, right? And negative is called bargain purchase. Why bargain purchase? Because you did some bargain, right? It means that you bought the business for the less amount than its net assets, right? You had some bargain purchase, it's called. Okay. Now we're going to look at this deferred consideration first of all. So this is an example of deferred consideration. Parent acquired 60% of subsidiary on 1st of January 2008 for 100,000 cash payable immediately. And further 132 after 2 years. If you see here, this one is deferred consideration, right? After 2 years, they are going to pay 132. The fair value of subsidiaries identifiable asset at acquisition is 300,000. So using these considerations now, right, we need to calculate the goodwill. An appropriate discount rate is 10%, at which the present value of $1 payable at the end of the year is, so they already gave you the discount factor, right, for 1 year. The deferred consideration has not been accounted for when preparing parent financial statements, and parent choose to measure non-controlling interest in subsidiary as a proportion of the fair value of the net asset. So proportion of fair value of net asset, it means that if 60% belongs to parent, 40% of this fair value of net assets is NCI, right? So just 40% of 300 is NCI in this case. All right, now they are asking us to calculate goodwill. So the consideration, this is paid, right? This one is paid, 100,000. Also there they have deferred, but deferred we need to discount. And for 2 years they have discount factor already. You don't have to calculate. You just apply this discount factor on this one in order to find its present value. So you found the present value of deferred consideration, you added the consideration that is paid already, and you have total consideration, 109. Non-controlling interest, they are saying you that here, if you see proportion, right? If they give you amount, you use that amount. If they tell you the proportion, then you need to apply to this amount that they are giving for the whole subsidiary. So subsidiary costs, it means 300, right? So this 40% of the 300,000 is 120. In this case, it's NCI. And fair value of identifiable assets, 300, it's given. You just take it and deduct from consideration plus NCI. And you have the difference positive, right? If it's positive, then it's called goodwill. If it's negative, then it's called bargain purchase. So what you do in this case with the deferred consideration, so you calculate the deferred consideration as 109, right? So 132,000 we multiply by 0.826. This is the parent separate financial statements. So in the parent's separate financial statements, you will have this one. Cost of investment in subsidiary, right? You add this one into your subsidiary. And you will have liability deferred consideration because you didn't pay it. You will pay it in the future after 2 years, right? And each year you will charge on the top of your deferred consideration by 10%. So first year you will charge this amount, top up, right? So you make it at the end of second year when you should pay, this amount should become 132. It's called unwinding. Unwinding, you are by charging interest. So you charge each year interest expense by 10,900 And next year, on the top of the balance, you will have again 10%, and at the end of second year, you will have 132,000, which you will pay and just close your liability. Okay. All right. So first, you recognize at fair value, present value, and then you charge interest for the whole year and make it like top up each year. Да, Ксения?
У нас получится 2 года будут проценты, да, в расходах.
Да, но 2 года будет другая сумма, потому что первый год будет такая сумма, потом с той суммы будет считаться уже 200%. Да, потому что, смотрите, 132 тысячи должно получиться, да, если вы будете от первоначальной суммы считать interest, да, если на 2 умножите, плюс 109, то у вас 132 не получится, да. То есть вы в следующем году 109 плюс 10 и 9 делаете, и потом умножите на 10%. И ваш интерес будет уже 12, да? 11 990. 12 тысяч, да, получается 12 тысяч плюс 10 900, которые у вас есть, да? И плюс вот эта сумма. 109.
Ну да, все тогда более-менее.
132, да, будет тогда.
Спасибо.
Ну, цель вот анвайндинга в том, чтобы сейчас учесть как present value, да, а потом каждым годом прибавлять так, чтобы к концу года, когда нужно оплатить, эту сумму стала вот такой изначально, насколько договаривались. Вот
Но
в
она
этом
на
смысле.
разных счетах будет, да, у нас?
Ну да, interest expense будет. У нас вот deferred consideration будет, и он будет увеличиваться с каждым годом, и к концу второго года станет 132 тысячи. А мы будем interest expense начислять через PNL просто.
Спасибо.
Так, this is an activity, please try it yourself, almost the same like we did now. Here we're going to look at the contingent consideration now. Contingent consideration, as I told you, so in the exam advice, an exam question will state the fair value of any contingent consideration. So you don't have to calculate the fair value of contingent consideration. Okay, this is good. Good point. So we will now look at this activity, how to deal with contingent consideration and what kind of question you may have related to this contingent consideration. So following on from activity 1, Prattle Co. also commits to pay 10 million to Swan Co. in 2 years. So this is the commitment, right? In 2 years, they should pay 10 million. If it means that they have contingent event, right? Something future event. If the Swan Co. continue to grow by 5% over that period, so over these 2 years, Swan Co. should grow by 5%. So here, this is the contingent event, right? That if Swan Co. continue to grow by 5% over 2 years, then 10 million consideration will be paid in 2 years. On acquisition, an external valuer assessed that this is not probable, and estimated the fair value of this contingent consideration to be 4 million at 1st of January. And however, at 31st of December, the valuer assessed the fair value to have increased to 6 million. So they are saying 10 million, but the fair value is assessed about 4 million and 6 million. Explain how the contingent consideration should be accounted for. So in the separate financial statements, right, contingent consideration is not recognized in Prattle's separate financial statement because payment is less than probable. So as you see here, not probable, right? When we recognize the liability when they are probable, right? When they are more than 50%, then we recognize a liability. But for asset, it should be virtually certain 95% when it's contingent. So the valuer is assessing that it's not right, but then let's say because of the payment is less probable, therefore Therefore, the cost of the investment does not include the contingent amount. In this case, into consideration, you should not add this amount. No liability is recognized. Just you need to disclose it in the notes, right? If you have in your separate financial statements. In the consolidated statement, consideration must be recognized at fair value in the consolidated financial statements, even though the payment is less than probable. So, but as you see here, the different approaches, right? They are preparing separate financial statements. They don't do anything, just disclose their notes. But in consolidated, they should recognize even if it's less than probable under IFRS 3. Therefore, on 1st of January 2001, the fair value of 4 million is included as consideration in the goodwill calculation and recognized as non-current liability, but 4 million only. As you see here, the value said that 4 million it will be, right, on 1st of January. So in the consolidated statement, they recognize it as consideration and included into the goodwill calculation. And at 31st of December, it increased to 6 million. This 2 million increase is not added to goodwill, but recognized as an operating expense in the statement of profit or loss with the corresponding expense in the provision. So you don't recalculate your goodwill after 1 year when it became 6 million. Only at the acquisition date, you calculate the goodwill, okay? So just this amount you will recognize, but through operating expense. As the amount is now potentially payable in 1 year, it will be presented in the statement of financial position as current liability. So you will just show it in your current liability in consolidated financial statements, even if it is not probable. But separate financial statements, you do not, okay? Of course, this may be misleading, this concept of contingent liability, but here we apply IFRS 3, and that's why when we apply IFRS 3 at acquisition business combinations, then we should treat it differently, okay? Share exchange. So let's look at the share exchange. Share exchange is when consideration is paid by share, right? Да, Ксения?
Можно по предыдущему кейсу вопрос? Если мы 4 миллиона признаем, да, при этом выплачиваем, простите, 5, а 2 идут в текущие расходы. Не очень понятно, что с этим миллионом, он куда девается? То есть по деньгам-то у нас пройдет 5, правильно?
Вот здесь вы имеете в виду?
Да.
Смотрите, здесь вот это 4 миллиона вы просто включаете для того, чтобы посчитать Goodwill. То есть как мы Goodwill считаем, да? Consideration, да? Это нужен нам для того, чтобы Goodwill посчитать. Сейчас, секундочку, где формула у нас Goodwill. Вот этот consideration, да? Вот в этот consideration, чтобы его включить, мы вот эти 4 миллиона включаем. Но, смотрите, мы его включаем в calculation, а 6 million уже не включаем. И теперь смотрите. The value assessed the fair value have increased 6 million, да? Вот здесь вот эти 2 миллиона мы потом не пересчитываем, чтобы Goodwill посчитать заново, да? Что мы делаем? Amount is now potentially payable in 1 year. It will be presented in the statement of financial position as current liability. То есть мы вот эти 6 million у себя показываем in current liability на конец года. На начало года мы ничего не делаем, на начало года мы только для Goodwill Calculation вот эти 4 миллиона используем, да? А потом мы вот эти 6 миллионов, то есть разницу, да, уже, потому что мы уже 4 миллиона учли как Goodwill, поэтому разницу 2 миллиона мы уже в конце года признаем как current liability, потому что через год нам нужно его оплатить.
А платим мы 5 в итоге? Или все-таки 6?
Платим мы 6. Платим мы 6, да. Но мы его у себя в Goodwill. Ну, вообще-то да, мы вообще в current liability должны 6 показывать. Просто вот эти два, разница пойдет через operating expenses. Вот. Изначально мы его, вот это мы изначально признаем как consideration, вот так, да, как точно так же, как и здесь. Как вот consideration, только не deferred, а contingent, да, будет. Contingent consideration 4 миллиона на 1 января мы делаем, но его включаем на Goodwill, потому что он в Goodwill будет входить, когда мы будем считать Goodwill. А потом мы его через operating expense, вот сюда operating expense 2 миллиона сделаем, посадим, да, и у нас вот этот consideration 2 миллиона посадим, он в итоге на 31 декабря будет 6 миллионов. Да?
Спасибо.
Мгм.
Да. Но и заплатим мы 6 все-таки.
Да, мы заплатим
Потому
6.
что
Да.
они ковенанты вот эти выполнили по увеличению
Да,
кредита.
да, 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 заплатим мы 6.
Спасибо.
Okay, share exchange. Parent acquired 80% of subsidiaries, 100,000 shares in a 3 for 5 exchange. 3 for 5, it means that they are giving 3 for their 5 shares. The market price of one share P on acquisition was $4, and that of S was 2 and 2. So the market share of parents cost a market price of share 4, and subsidiaries share was at that time 2.2. Cost of investment, what were 80% of 100,000 shares, 3 to 5, right? They are giving 3 shares to 5 shares of S. It means they are giving 192,000 to the market price of shares are irrelevant because we are calculating the consideration. So the consideration would cost 192,000 in case if they paid with their shares to as 80% of their subsidiaries.
Скажите, пожалуйста,
Да.
вот в этих задачах меня всегда смущает, а для чего они дают стоимость акций S?
Стоимость акций S, да, вот в этом случае не irrelevant, просто так они дают. Вы можете просто посчитать, сколько share вообще будет S получать, да, в этом случае. На какое количество share S они берут эти суммы, наверное, так, поэтому. Например, да, 192 тысячи, если на 2,2 поделите, да, сколько share of S вы получите.
По сути, да?
Ну, возможно, может быть какой-то маленький, да, что вот 192 тысячи вы поделите на 2,2, да, сколько share в итоге вы получили, да, of S.
Понятно, спасибо.
Okay. Okay, you can try this activity 3 for share exchange yourself in order to just exercise some questions related to share consideration. So what in this case, your consideration is this, right? And you put, when you are calculating goodwill here, their value of consideration 92,000. This is a good table for you in order to remember how to deal with different kind of considerations. Deferred consideration, contingent consideration, and share for share exchange. All right, we looked at this one example, and now we're gonna move on to the identifiable assets and liabilities. So within the company, their identifiable assets and liabilities, they must be separable or have legal and contractual rights in order to recognize them separately. So as an example, we can say the customer list, brands. So if they meet the criteria of intangible assets, they should be recognized separately. Then they may be contingent liabilities. They recognize as provisions. So depending on, again, if they meet the criteria or not. Restructuring costs not included at acquisition, so we ignore if they are restructuring costs. Now we're going to look at some examples related to these identifiable assets and liabilities. Okay. So they should be recognized separately from goodwill if they meet the definition of asset and they are identifiable, right? Exam advice. Intangible assets should be included in subsidiaries net asset at acquisition, in the net asset working, and in the goodwill calculation, and should also be presented in consolidated statement of financial position. So if you have already you understood that they are intangible assets, right, within the subsidiary that is being acquired, then you should also include their amount separately from goodwill in your goodwill calculation and when you are calculating net assets of your subsidiary. Okay, recognized goodwill. The carrying amount of the recognized goodwill should be deducted from the subsidiary's net asset at acquisition in the net asset working and should not be presented in consolidated statement of financial position as assets of the group. So let's look at this now example. And they are also contingent liabilities, they may be right, of the subsidiary. If an exam question gives you fair value of contingent liability, it should be deducted from subsidiary's net asset at acquisition in the net assets working. Why it should be deducted? Because when you have liability, of course, your net asset will be decreased, right? If there's contingent liability, separately they are not recognized, right? But within the consolidated statement, they should be recognized. That's why they should be deducted from net assets and recognized liability as in the consolidated statement of financial position. All right. And the post-acquisition charge in fair value should be recognized in relevant category of consolidated statement of profit, taking care of considering the impact of non-controlling interest. All right. Reorganization. Here is an example for assets and liabilities recognized on consolidation. So we will have, we need to calculate the goodwill and what we need to consider when we are calculating goodwill. Okay, on 1st of January 2002, Polar Co. acquired 65,000 of Space Co.'s $100,000 equity shares for $420,000. When Space Co. retained earnings were $470,000, Polar Co. measured the non-controlling interest in Space Co. at fair value of $180,000 at the date of acquisition. So if you see here, non-controlling interest, they have already fair value, right? You don't have to use the proportion method. You just put this instead of NCI, you just calculate in your NCI, you just put this amount, okay? The following assets and liabilities were not recognized in separate financial statements, so they should be recognized maybe in consolidated statement, and that's why they should be included in that asset calculation of subsidiary. So that's why we need to look at that. An order backlog, which an acquisition was determined by an external valuer to have a fair value of 20,000 order backlog. Order backlog means that they have some orders logs, right? There is a type of data maybe that is very useful for analysis. Contingent liability resulting from a present obligation was estimated fair value of 25,000 at the date of acquisition. Space Co. separate statement of financial position included 10,000 goodwill, which it had recognized on the acquisition of a sole trader business in 2000. So also Space Co., this subsidiary, has goodwill, right, in their statements, which they had because of this when they acquired the business in 2000. What we need to include into our goodwill calculation in this case? So fair value of consideration, the consideration that is paid, right? 20,000, right? And then fair value of fair value of NCI, it's given, as you see here. If it was not given, then you should have made a proportion, right? Proportion of the net assets of the subsidiary. So now we are calculating ourselves the fair value of net assets right? What do we do in this case? We know that they have share capital, right? 100,000 at $1. So 100,000 share capital they have. Also, they had at the date of acquisition retained earnings, 470,000 we included. Then the adjustments, because they didn't include these ones into their net assets, that's why for calculation of the goodwill purposes and for consolidation purposes, we should also take them into account. So these are the adjustments of intangible asset. So this is the intangible asset or the backlog, because using this data, they may gain something in the future. So if it met the let's say the definition of intangible asset, then we recognize it as intangible asset. This is plus, this is asset, right? Contingent liability is minus 25,000, right? And goodwill that is recognized, we need to derecognize it. That's why we are doing minus. The goodwill of SpaceCo, right, which was recognized on acquisition, and when the parent buys this SpaceCo, should be derecognized. All right, so that's why minus 10. So they have net assets and also some adjustments, and after that adjustments, they have this amount of net assets of the subsidiary. Consideration and plus NCI minus net assets will give us the goodwill of 45,000, right? So this is how we calculate goodwill. Always take the net asset that is given and then do the adjustments. Do the adjustment depending on what you have. In this case, we have what we have in this case. So you need to just list them. So you have intangible asset that you need to consider, right? We consider that intangible asset, that backlog of orders. Then the goodwill should be deducted from subsidiary's net asset at acquisition. As you see here, they are giving you an exam advice. So goodwill of the subsidiary should be is not identifiable asset. That's why it should be deducted from net asset when you are calculating goodwill. If you have contingent liability, which is not recognized separately in the separate financial statements, then you need to also include them according to IFRS 3, the same that as we did before, right? When we were doing consolidated statement of financial position. So these are three different. And then reorganization cost, not liability. So if you have some reorganization cost of the subsidiary, also they don't affect your net asset calculation. Done, Ksenia?
Goodwill всегда, да, исключается?
Что?
Goodwill всегда исключается, да? Почему вот он...
Goodwill of subsidiary исключается, да.
А почему? Почему? Ну, то есть это, мы не признаем, что он есть, типа актив этот?
Нет, почему? Потому что мы отталкиваемся от того, что вот мы дали, да, и то, что мы можем вообще понять. Мы же не знаем, как он признавал этот goodwill, да? На каком основании он признавал этот goodwill, мы же не знаем. Мы сейчас свой goodwill считаем на основе того, что у него есть. У него есть, мы знаем, вот fair value, да, у него есть какие-то ассеты, которые мы можем сами просчитать и прощупать, да. И после того, как мы прощупали, посчитали, у нас свой goodwill появляется. Мы с его goodwill свой goodwill не добавляем.
Он всегда убирается, да, в любых случаях?
Да. Goodwill, если у subsidiary есть, мы его всегда убираем при business combination для консолидации. Okay. This is how we deal with identifiable assets and liabilities. So here is an example. So if you see the restructuring cost of the subsidiary, of course, also don't include it into the net asset when you are calculating the fair value of net asset of subsidiaries. Okay, let's look at this fair value adjustment overview. All assets and liabilities should be at fair value, right? So let's look at these examples. We have a lot of examples related to the fair value. So at acquisition date, all assets and liabilities of subsidiaries in the consolidated statement of financial position for calculation of the goodwill, right? We need to measure at fair value with limited exceptions, like for non-current asset held for sale, for example. There may be some limited exceptions, but usually all the liabilities and assets are taken into account at fair value. We will look at these different examples. We use in this case IFRS 13, highest and best use for all assets and liabilities. And this is a consolidation adjustment, not separate financial statements. If so, when companies prepare separate financial statements, they don't have to value their all assets and liabilities at fair value. But for consolidation purposes, for consolidation adjustment, we need to do this work. So we're going to look at this now examples, which is example of non-depreciating asset, how we deal with this, then example of depreciating asset at fair value adjustment, then example of inventory at fair value. Before moving to those ones, let's also talk about the mid-year acquisition. So mid-year acquisition happens when mid-year acquisition is when you acquire some business, right? And your financial year covers only part of that period that was under control, under the control of parent or the group, right? In calculating net asset at acquisition, subsidiary transactions in the statement of profit or loss are assumed to accrue evenly over the time unless indicated otherwise. So if they don't tell you anything, then you just assume that they were accrued evenly. It means that you just do the prorata, right? So let's say you have the profits after the acquisition, 12,000, but under the control of the parent, the subsidiary was only 4 months, then you divide 12,000 by 12 and divide by 4, right? In order to understand which part belongs to the group. If you don't have other, let's say, conditions, right? You do this. But if you are given some other figures, then of course you need to use those ones. Let's look at this activity in order to understand how to deal with the mid-year acquisition. It's easy, you will see it. So let's say parent acquired this one on 31st of May, right? May means that June, July, August, September, October, November, December, right? 6 months. Share capital this, retained earnings this, and okay, can you please read this question now? So here we have the share capital and the retained earnings, right, of the subsidiary, but at the end of the period, at the beginning of the period, right? So this is then during the year, subsidiary made a profit of 600. A non-controlling interest is measured at proportionate share of the identifiable net asset. Calculate subsidiary's net asset at acquisition, calculate the goodwill on acquisition, and show the profits from subsidiary to be included in consolidated retained earnings. So we need to do 3 things, right? First of all, net asset at acquisition. So acquisition happened 31st of May, right? It means that after six months, right? After 6 months, during the year they had a profit of 600, right? So it means that if we assume that this one was earned evenly, we just divide by 12 and multiply by 6, right? So half of this one we will assume that was in the retained earnings, half was earned after the acquisition, right? So at the acquisition we may say that share capital is 1,000 and the retained earnings is 15,300, right? So this is going to be the net asset of subsidiary. All right, and non-controlling of interest is 20%, and 20% of that new amount, adjusted amount, we can take as a non-controlling interest. Okay, let's look at this one, how we calculated the first net asset of subsidiary acquisition. This is only 5, not 6. It means 5, right? January, February, March, April, May. Как я посчитала? June, July, August, September, October, November, December.
Вы год спутали. Год.
Ну да, 5 месяцев оказывается.
Думали, что
Почему нет?
6-й
Почему-то
год.
я 6. Почему я посчитала неправильно? Ну, короче, да, 5 months, да. 5 months, it means that we assume that 5 months passed when we were acquiring, right, the business. So this was already earned, right, at the acquisition date. So the acquisition date, at the acquisition date, their net assets were 15,250, right? All right, this is at the acquisition date, net asset of subsidiary. And now we need to, no, at the acquisition date, this was the retained earnings, 50,000. But the net assets also will include this share capital 1,000, right? So it's going to be 16,250. So this should be extra line here. Just the goodwill calculation should be a little bit lower here. This is the net asset of subsidiary at acquisition. It doesn't belong to goodwill. Goodwill calculation will go further. Okay. So the cost of investment, they are given for a goodwill calculation, we need the consideration, right? Consideration paid is here given, right? 20,000. But 20,000 we only for 80% of the subsidiary, right? For 20% non-controlling interest, we just take from 16,250 that we calculated net asset because they are saying the proportionate share of method, right? We just take this one and we apply 20% for it. So the 20% of this one would be 13,000. Again, they have some mistake here, should be 20%, right? 80% они посчитали. Поставили, неправильно поставили, 20% должно быть. 20% умножаем 16, 250. Почему? Надо же... они просто 80% убрали, хотя нужно было просто добавить же net asset of the... Короче, я вам как обычным путем покажу, чтобы вот вопросов здесь не было. Вот что бы надо было сделать здесь, да? Когда мы считаем goodwill, мы берем consideration, потом NCI, и потом net asset of the subsidiary. Это less, это add. So consideration was 20,000, right? And NCI was 20% of the share of net assets, right? At acquisition, 16,250. Yeah? And minus net asset, 16,250. Просто они 80% взяли, потому что от этого все равно 20% они отнимают, понимаете? Вот просто как-то так посчитали. Хотя, если в степ-бай-степ, то же самое выйдет, просто чтобы не запутались, чтобы запомнить вообще steps, да, лучше вот таким образом считать. Вот, но все равно так же и выйдет.
Это на дату покупки, да, мы считаем?
Вот, Goodwill.
На дату приобретения это.
Вот здесь просто они математически взяли и сказали, давайте не будем там умножать, потом отнимать 100%, лучше просто возьмем 80% и все. Как-то так. Ну ладно, но в нашем случае то же самое, просто чтобы было понятно, мы всегда эти steps делаем, да, когда Goodwill считаем. Consideration берем, NCI берем и отнимаем от него net asset, который у нас at acquisition есть. И вот у нас Goodwill то же самое, 7 тысяч будет. Следующее, они говорят profits from subsidiary to be included in consolidated retained earnings. Да? So the retained earnings, if you see the profits that were related to the period that was not under control of the parent is 250, right? 250 is the profit. But it means that 350 is post-acquisition profit, right? Post-acquisition profit is 350. If out of 600, 250 doesn't belong, only 350 belongs to the parent. But post-acquisition profit. What does it mean? Not all this, right? Only 80% of it belongs to the group, right? Group. 20% is NCI. So we will have here out of this one belongs to this, and this one will be in our NCI, right? Okay, so the share of the acquisition profit, post-acquisition retained earnings, this one, 280. So this is 80% of 350, because this part is earned till 31st of May, right? After that period, they earned till 31st of December this amount, right? Over the year, they earned 600,000, 600 over the year from 1st of January, right? So from 1st of January to 31st of December, they earned 600, and out of 600, this one belongs to till 31st of May, and the rest will belong from this period till this period, which is under the control of the group already. But because of 80% only belongs to the group, only 80% of 350 belongs to the group profits, share of post-acquisition retained profits. This is mid-year acquisition. Now we will look at the fair value adjustments. Let's finish this topic, even if we are, we started with you later, right? So we have 10 minutes more. Okay. So in the exam, what you should do, still held by subsidiary, if there are the assets that are still held by subsidiary that you need to do the fair value adjustment, then they are reflected in relevant asset liability line in consolidated statement of financial position and included in subsidiaries net asset schedule at the acquisition date and the reporting date. So this fair value adjustments, when you do, you also need to include them in subsidiary net asset at acquisition. So it means that it affects your goodwill calculation as well, right? So if you have depreciating assets, fair value of depreciating asset may differ from the carrying amount at the acquisition date, right? If fair value is higher, then the difference will be added at acquisition and at the reporting date column when you are doing net asset working. So when you are calculating net asset of subsidiaries, let me show you. You have net assets of some. This is working, right? You will have two columns at acquisition and at reporting date. So when you have the depreciating asset and the fair value is higher than the carrying amount, then you need to this fair value adjustment into two columns at the reporting date and at the acquisition date. So the fair value adjustment should be at here as well as here. And if fair value is lower, the difference will be at acquisition date and the reporting date column. Again, should be deducted. This one you add, and if fair value is more than the carrying amount. If fair value is less than carrying amount, then you deduct less. The same, those differences should be done. This is obvious, this is logic, right? So because you are correcting the net asset amount by increasing it or decreasing it. And the additional, in either case, an additional adjustment required at the reporting date column for increase of accumulated depreciation. So, and here, in both cases, also you need to do the depreciation, but only at the reporting date. Why? Because if you did the adjustment of the fair value at acquisition date, you don't have anything here yet depreciated, right? So only after the depreciation happened, this depreciation adjustment should be done at the reporting date here. It's also, I think, logic. So depreciation will be only done at reporting date. So you will add this depreciation adjustment only here. Okay? Correspondingly here, adding or deducting, depending on what you have, more or less fair value. Okay, let's look at this example. This is the table just to remember for you the summary of all these requirements and rules. On the acquisition of subsidiary, the carrying amount of its subsidiary was of its building was 25,000 and the fair value was 30. As you see here, fair value is more than carrying amount, right? 5. The building had a remaining useful life at the date of acquisition, 20 years, and 2 years have passed since the acquisition took place. Now fair value adjustment at the acquisition date is 5, right? So what you do in this case, the post-acquisition, and now you will do this adjustment first of all, right? Here at acquisition date and the reporting date as well. But the post-acquisition adjustment for depreciation, you are doing only for reporting date, okay? This is the extract form net asset workings, fair value adjustment, both of them, 5, right? And then you have subsequent depreciation. You are charging depreciation, right? So this is affecting negatively your net asset. Okay, 500,000 because of 2 years passed out of 20 years. So 5 million, the difference, right? The difference you are dividing by the years remaining and the days passed, already 2 years passed. So this is the reporting date now. And that's why 500,000 you are charging 0.5 because you are showing here in millions. I think it's clear why you put here with the minus, because you are charging depreciation. Okay. But if it was less, you would do the same, but here would be fair value adjustment minus, but depreciation would be was plus in this case. If it was vice versa, here would be was 30 and here was 25, for example. Non-depreciating asset. If you have non-depreciating asset, the fair value of, let's say, land, right? Land is not depreciated. So if you have the same values for this ones, you will have only adjustment for the fair value, right? There is no adjustment for depreciation. So straightforward. What about the inventory? So for the inventory, you have realizable value, right? So fair value is based on the net realizable value. So if a subsidiary statement of financial position at lower of cost and net realizable value, you want to remeasure it. Fair value on acquisition is higher than the carrying amount, the difference will be added to the net asset. Schedule at the acquisition date. So inventory measured at fair value on acquisition has been sold by the reporting date. No fair value difference will remain. So if you are measuring at fair value, right, on acquisition date, on acquisition, and has been sold by the reporting date. So if you see it and it was already sold by the reporting date, then you don't have any fair value differences, right? If the inventory has not been sold, but fair value difference will be the same at the reporting date that it was acquisition. So here we have two options, right? Here it's sold, in example, But if it was not sold, you would have both at reporting and acquisition date. Because of the at reporting date, you don't have inventory, you don't have anything related to the fair value of that inventory, right? That's why you don't put anything here in the reporting date. But if you had still at reporting date that inventory, you would have also here that difference, right? Again, this example, inventories were this and fair value is this. Inventory has subsequently been sold. If you see here, then on the reporting date, you don't put anything. But if you see here that it was not sold by the reporting date, you put this amount the same here, okay? These are the rules for the inventory. Okay, we are including here, as you see, property, plant, and equipment, cost of investment, and current asset. The following is a summary of statement of financial position, POPUCO and Scarlet Co. So POPUCO, this is Scarlet Co. Let's look at who is parent here. POPUCO is parent, right? Because it bought 90% of Scarlet on 1st of January. And this is already the year end, 31st of December. When non-controlling interest was measured at fair value, 30,000. So NCI, 30,000 in this case. At the date of acquisition, Scarlet Co retained earning at the date of acquisition, right? So it's important to know at the date of acquisition at the reporting date. Why? Because we need to calculate the at the date net asset of subsidiary and also at the date of acquisition and the reporting date net asset of subsidiary, because the difference would be post acquisition profit that belongs to the parent, depending on the percentage of ownership. All right, and these are the identifiable asset and liabilities to their carrying amount with the following exceptions. Item of equipment had fair value 60 above its carrying amount. So fair value was more, right? At the date of acquisition, it had remaining life of 4 years. So here we have 160,000 property, plant, and equipment, right? They are saying that equipment was 60% more than its carrying amount. Inventory. Okay, costing 25 had fair value and all was sold. As you see, you don't have here any inventory because they sold. So only at the date of acquisition, we need to also the difference between them put into the adjustment of net assets at acquisition of the subsidiary. Also identify contingent liability for some environmental damage, right? Estimated fair value 25,000. The damage was cleaned up during the year. So during the year was cleaned up, it means that you don't have a liability. That's why, right? Your contingent liability you don't have. But at the date of acquisition, also you need to consider it because it will decrease your net asset of subsidiaries. All right, so what we do in this case, we first of all need to calculate the subsidiaries net asset, right? At the reporting date and acquisition date. So issue capital, retained earnings, right, will go from here, issued capital, right, share capital and retained earnings, 50 and 90. This is the at the reporting date, right, 50 and 90. Okay, at the reporting date. And then we do only the, as you see here, inventory was sold. We don't do any adjustment for inventory at reporting date, and contingent liability we don't have at the reporting date because the damage was already covered, right? So they don't have any liability at the reporting date. So these adjustments we don't have, but only we have the fair value adjustment for the equipment, right? Useful life of 4 years. So here at the reporting date, fair value of the equipment 60 above its carrying amount at the date of acquisition, remaining 4 years. So they are already doing this adjustment out of depreciation, as you see here. Would be 60, right? Fair value and minus, as you see here, they would be like this. 60, they would here adjustment, 60 right? At the acquisition date also they would have 60, but because of they are charging the depreciation for 60, the difference divided by 4, and this depreciation would decrease the net asset, they would have, as you see, for 45, right? So that's why at the reporting date, they have 45, but at the acquisition date, they have adjustment of 60. All right, and so this is the reporting date, and we have all this after the adjustment subsidiaries net asset. Let's look at now acquisition date. Issued capital, they don't say anything. That's why we are just taking that nothing was happened in issued capital. But what about this one? At the acquisition date, retained earnings were 70. That's why we are putting instead of 90 at the reporting date, it was 70, right? So we are putting here at the acquisition date 70 for the retained earnings. And those adjustments that we are doing 60, I showed you already. Inventory 15, because it's also said that inventory valued 40, but costed 25. So the excess amount 15 is included at acquisition date, but inventory was not at reporting date already remaining in the balances. So we don't have it we don't have anything here. And contingent liability they had, right? 25,000 we are including, minus, why? Because it's liability, decreases the net assets. So here, this is the adjusted amount of subsidiaries net asset at acquisition date. Post-acquisition is just the difference between them. So here we don't have anything. And if you calculate, you have just 15, right? What is post-acquisition and why we need it? So it means that after the acquisition of the company earned 15, right? And out of this 15, 90% belongs to the group. So we will now divide them into the group and NCI. Goodwill. We take the cost. It means the consideration that was paid, right? 150,000 they paid for acquiring this business. How we understood? Because of the cost of investment in Scarlet, Poppy has in the balance as 150. So we are taking this as a consideration. And then fair value of NCI, it's given 30, right? Here, 30 NCI, okay. Minus net assets at acquisition date, 170,000 here minus, and we have goodwill 10. Non-controlling interest, we have fair value on acquisition. Which one? Which is given already, right? This one. And then out of this 15, 10% belongs to NCI. So that's why we add up this 10% of 15. This will go to NCI and consolidated retained earnings. We have Poppy's retained earnings, 550, which is given, plus share of the profit out of this 15, right? 90%, 90%, and the total consolidated retained earnings, this amount. Okay, so this is then let's stop here, accounting for positive and negative goodwill and accounting for impairment, which is left for tomorrow. Only this is left related to the to this topic. So we're going to deal with the goodwill tomorrow and move on to the next topic again related to the consolidation. Okay. All right, then thank you for your participation, Ксения. Увидимся тогда завтра с вами. Попробуйте подкрепить то, что мы сегодня изучили с вами, потому что очень много всяких adjustments, можно запутаться,
Очень
конечно.
много, как все это. И это все будет возможно в одном задании, да?
Да. Не все будет, но частично что-то будет, что-то не будет. Но лучше все знать.
Лучше все знать, понятно. А что вы рекомендуете подкрепить? Где? Что?
Ну вы можете вот practice question сделать, и они будут включать все вот эти вопросы, которые мы с вами сейчас. Вот practice question, зайдите. Так,
Ну,
здесь
вот, 22, 23, 24.
да, consolidation adjustments, да, вот и сделайте practice, да, здесь очень много, видите, 14 вопросов.
Хорошо.
Видите? Да, что должно purchase consideration, то, что мы с вами прошли, да, shares здесь, вот respectively, какой нужно учитывать, что нужно, вы сразу поймете. Опять же, здесь fair value of identifiable net asset, да, то, что мы с вами сейчас прошли, IFRS 6. Что нужно? То, что учитывается, например, в consolidation, да, а в separate financial statements не учитывается, например, да. Вот опять. Какие adjustment могут быть, да, так, companies non-current assets, inventories, да. Это все вот сейчас только что мы с вами прошли, да, inventories, там fair value учитывается, non-current asset fair value учитывается, и так далее. Каким образом они учитываются? Вот опять contingent consideration, как его там посчитать, да, сколько он будет попадать. Ну, все вот то, что мы прошли, все будет здесь. We are continuing with you the chapter 23, consolidation adjustments, and we stopped here, accounting for goodwill. If you remember, yesterday we did a lot of adjustments, fair value adjustments, for non-depreciating asset, for depreciating asset, and inventory, which we should include in our goodwill calculation as well, because of these adjustments also influence the net assets of subsidiary. Now we will talk about accounting for goodwill. When we have positive goodwill, we talked about it. Again, I will repeat. When a company has a consideration plus NCI minus net asset of subsidiary, positive value. So if it is positive value, it's called positive goodwill. Goodwill is not amortized, and goodwill is recognized only at group level. It means when you are doing consolidation, you can recognize goodwill. In separate financial statements of parent or subsidiary, it's not recognized. Only when you do consolidation, it appears, okay? Because you show the results of the group, and it belongs to the group, not to the parent, not to the subsidiary, but to the group. That's why you can see it only in the consolidated financial statements. Goodwill is not amortized, but it's tested annually for impairment. And each year when you test for impairment, you see if the goodwill amount is decreased, then it means that you need to, through P&L, you need to, again, through consolidated P&L, you need to show this impairment. And once you recognize this impairment, you cannot reverse it. If you remember, in some cases, we can reverse impairment, right, for, let's say, inventory or for property, plant, and equipment, but for goodwill, it doesn't apply. Once you recognize impairment, that's it, you cannot reverse it back. Okay, this is also the rule that is relevant for goodwill only. All right, what is bargain purchase? Bargain purchase is the negative goodwill. When you have negative goodwill, when you have consideration that is paid for subsidiary plus NCI minus net asset of the subsidiary, and you have the minus, right, the negative value. If you have negative value, it's also called bargain purchase. Why? Because the logic is like you are paying less, right, for the net assets of the subsidiary than its fair value at that time. In this case, what you need to do, you need to reassess inputs. It means that you need to reassess the fair value of assets and liabilities, or if you have some other contingent considerations or other type of liabilities, right, that you need to do adjustment to the net assets of subsidiary. You need to reassess them. And after that, even after that, if you have this negative value, then this gain should be recognized in P&L. Again, in consolidated financial statements, you need to recognize this gain. We can look at this example in order to understand how to calculate this impairment and how to account for it. Accounting for impairment. Forest Co. acquired 80% of the equity shares of Grange Co. on 1st of January 2003 for 1.2 million. The fair value of Grange Co.'s net assets at the date of acquisition was 1.1 million. At 31st of December 2003, Forest Co. determined that goodwill was impaired by 25%. Calculate the amount of goodwill at 31st of December and explain how the impairment loss would be allocated to non-controlling interest and at acquisition. So non-controlling interest at acquisition was measured at fair value and proportionate share method. One thing I forgot to tell you, that when the group has impairment of goodwill, this impairment loss may be allocated differently depending on the method of NCI. So if the method of NCI is fair value method, then it should be allocated into the owners of the parent and NCI. Only if it is fair, if it's measured in at fair value. If NCI is measured using proportionate method, then entirely all this impairment loss should be allocated to the owners of the parent. Okay? Why it is important? Because these adjustments, for example, in this case, if NCI is measured at fair value, this impairment loss adjustment will go through retained earning of the group, as well as in equity part, right, of the statement of financial position. Retained earning of the group and also NCI, but depending on the percentage of the ownership. If NCI is measured using proportionate method, then all the impairment losses will go through retained earnings of the group. It means that it should be attributable only to the owners of the parent, not NCI. Okay, so we're going to look at these examples now. So here in this case that NCI measured at fair value, we need to allocate both to the parent, right, owners of the parent, and NCI, that impairment loss. And in case of B, we don't have to allocate this impairment loss to NCI. We allocate the full amount to the owners of the parent. It means we will do the adjustment only through the retained earnings of the group. All right, so 80% of equity shares, right, and the fair value of the net assets. All right, we will just look at this, how it looks like. The consideration is paid 1 and 2 million, right? Non-controlling interest in this case is given, right? Fair value 240,000. We will just put here 240,000 because we take the fair value or fair value method. Then net asset at acquisition, they are also giving us net asset at acquisition. We don't have to calculate. Sometimes if it's not given, we need to calculate, right? So usually when you calculate the net asset of subsidiary, you calculate at the reporting date and at the date of acquisition. So for these purposes, you take share capital plus retained earnings at the date of acquisition or at the reporting date correspondingly. So it's given now. We just put this amount here, and as you see, consideration plus NCI minus net asset of subsidiary, and then you have goodwill. And they are saying that impairment was 25%, right? So you are doing this impairment, and this impairment should be deducted from the goodwill, right? So the goodwill's amount will decrease. So this impairment, 85,000, in this case, when the NCI is measured at fair value, it should be allocated into NCI and into the group. So 80% will go to the through the group retained earnings, and 20% will go of this, right? 85 impairment loss will go through NCI. So here we are calculating this. So 85% multiplied by 20, NCI will be allocated this amount, and owners of the parent will be allocated 68,000. If you ask me how it is allocated, I will show you now. And here, yesterday we were doing this examples, right? So let's say you have consolidated statement of financial position, right? And you have assets, liability, and equity part. Equity. And within the equity, in consolidated statement, retained earnings of the group, right? And NCI. So if you have some amounts already ready, let's say 2,500, right? So adjustments will go through adjustment of goodwill impairment. And in case of A, when NCI is measured at fair value. So you just divide this 85, right, into 2. So you deduct this, right, because it's impairment loss. So 80% will go through retained earnings and minus 20% will go through NCI. So your final figures will be these amounts, right? Plus. All right. And if it is second method, so if it is B option, in B option, this 85, the same steps, you calculated impairment, but the steps here will be different. In equity part, let's say we have the same amounts, but all this amount will go when NCI measured at proportional method. Then all this 85 will go through group retained earnings. And final figures will be here, this, and NCI will not be affected. NCI will be just this amount because this adjustment will not go through NCI. Okay, so please remember this related to the goodwill impairment. Okay, now let's move on to the next. So this is about the goodwill, how to calculate and the impairment of the goodwill. Now we're going to talk about the bargain purchase, right, which is negative goodwill, we can also say. So if it is, I already told you that if it is a bargain purchase, and then you need to reassess the relevant assets and liabilities. You need to reassess that all the assets and liabilities identified, fair value of identifiable net asset, and then the fair value of consideration. So after all this, anyway, if you have this excess, this gain should be reflected in the consolidated statement of profit or loss only when you do purchase, but when you are doing a consolidated statement of financial position, these retained earnings, consolidated retained earnings, should be increased at the year of purchase as well as in later years, because it has accumulated effect, right? So each year when you do consolidation, you need to consider this bargain purchase as a gain, right? And should be added into your retained earnings in consolidated statement of profit or loss only in the year of purchase, but in the statement of financial position in the year of purchase, also in later years until the disposal of subsidiary. So you need to consider it always. Here, one thing that you will not have this gain in separate statements, right, of the parents and separate statement of subsidiary only. It arises when you do consolidation. Again, I want to stress your attention to this point. Okay, and now we're going to talk about provisional. The last topic is about provisional accounting. Provisional accounting. What is provisional accounting? Provisional accounting when you provide for something, right? And if you don't have estimates, proper estimates, and when you are doing this business combination, right? You use the provisional method, so you provide based on something, right? And if you have some additional information on the assets and liabilities of the company when you are doing business combination, then you may remeasure it, okay? And the remeasurement period is up to 12 months. Within the 12 months, you can do this remeasurement. And if you do this remeasurement, it should be applied retrospectively. So from the beginning of the period when the control was obtained. All right. What is this? It's like when you don't know the what elements at the date of acquisition and what values to apply. So for the assets and liabilities, you apply provisional accounting. So you do some estimates, right? Okay, and if you have new information, you can adjust those estimates, right? But this should be done within the remeasurement period. Remeasurement period is 12 months. And also, So the measurement cannot exceed 1 year, right, from the acquisition date. And if you have adjustments, then adjustments should be done retrospectively within the 12 months. But if you have subsequent adjustments after the remeasurement, right? If you need to correct some errors or if you need to correct some values, right, in your business combination, then it should be done in accordance with IAS 8, which deals with errors and accounting policy and errors, right? So if it is change of accounting policy, then it should be applied retrospectively. If it is change in estimate, it should be applied prospectively. Okay, this is about some changes. If some changes happen when you value something, when you revalue something. All right, this is the summary table. So we learned with you the different considerations, right? If there is a deferred consideration, then you need to assess the present value of the consideration and include it into the calculation of the goodwill. What will be affected? Liability and finance cost. Why finance cost? Once you recognize your deferred consideration at fair value, then you need to unwind it, right? Unwinding means that charging interest each year. And if you are charging interest, the finance cost is affected. Then contingent consideration you may have, right? Contingent consideration, it means that if something happens, right, you will have that consideration. So you need to assess it at fair value on acquisition. It will be given during the exam. So you should take the fair value on acquisition. Equity and liability will be affected in this case. If you have share exchange, then fair value of shares should be taken into account when you are calculating this consideration. In this case, equity increase. Then subsidiary goodwill. If you have subsidiary goodwill, right, and you are calculating the net asset of subsidiary, then you should deduct it from net assets. Then contingent liability. If you have a contingent liability in separate statements, you don't recognize it, but in consolidated statement, you need to recognize this contingent liability, right? It will increase goodwill. Why? Because you include this contingent liability into your net assets, right? And net assets of the subsidiary will be decreased. As a result, the goodwill will increase because when you calculate the goodwill, it's better to have less net assets of subsidiary in order to have more goodwill. Intangible assets, if there are some other identifiable intangible assets, you should also include them as an adjustment when you are calculating net asset of subsidiary. It will decrease the goodwill because assets will be increased in this case, and the goodwill will decrease for the group. Restructuring costs should not be recognized, right? You should ignore them because these are post-acquisition costs for the subsidiary. All right. All right, we talked about already this difference between deferred and contingent consideration. How is goodwill impairment allocated? We talked about it today. So depending on the NCI's approach, if it is measured at fair value or proportionate method, the goodwill impairment allocation will be different, right? So impairment allocation, impairment loss would be allocated both to NCI and parent, owners of the parent, only if the NCI is measured at fair value. Should subsidiaries goodwill be included into calculation of net asset of subsidiary? No, it should not be included, right? It should be excluded. How are fair value adjustment to depreciable assets handled? So you do the fair value adjustment both to the when you are calculating the net asset of subsidiary at reporting date and at acquisition date, right? But depreciation charge you will do only for the reporting date adjustment because at that time, at the acquisition time, you don't have depreciation, right? All right, we looked at different examples in order to understand these concepts. So we finished with you today the consolidation adjustments chapter.